The third EAC investment conference has just taken place in Uganda. Two focal points was deepening regional integration within the EAC and also finding a remedy for the infrastructure problems in that part of Africa. Are there any significant resolutions to have come out of this investment conference?
Well, I think everybody knows what needs to be done and what can be done. And I think this conference was just a way of putting it all together and then presenting it. But I think the key themes that are coming out of it are about, as you said, about infrastructure and about power. And I think the interesting point is, and I sense East Africa's at a tipping point in this regard, is that there are plenty of people with bags of capital to make this happen. You've had the Egyptians come in with regard to the railway. They're putting more than $250 million on the table. For the last 40 years, we've had nobody with a dollar to their name to actually make this happen. And I think what you're seeing now is a tipping point in awareness of what the continent, of what East Africa needs, and the ability to make it happen.
All right, the host president was Yoweri Museveni of Uganda. As you are doing, he's lamented the high costs of transportation and electricity. Apparently in East Africa, you pay 5 times more for electricity than what the people do in China, for instance. Now, how is business in the region coping with these infrastructure problems? What does it add to the cost of doing business, and how can that be improved upon?
Well, absolutely. It's an incredible toll charge on everybody. Industry is hobbled by this extra expense. Consumers are paying higher prices for things. And we essentially have a very high cost structure across the region. And this is what we, if we get the power right, we get the infrastructure right, we have a real opportunity of making this a very, very competitive part of the world. So I think we know what needs to be done. It costs more to ship a container from Mombasa to Kigali than it costs to bring it from China. I mean, it is ridiculous. But clearly there is a lot of juice, there are a lot of opportunities, and I sense there are game changers happening in our region.
Right.
Take Uganda itself. The GDP is $8.5 billion.
Right.
Oil in the ground is 170 billion. It's not too complicated.
All right. Now, obviously, in terms of dealing with some of the log jams and the bureaucratic inefficiencies, most EAC countries have ratified the Common Market Protocol, which should try to liberalize trade and remove tariffs on trade amongst the EAC member states. Already you've got an FDI stock of $13 billion over the last few years. Is the EAC poised to stimulate more private sector investments through its various harmonization programs for industrialization and private sector development?
Yes, absolutely. I think you need an enabling environment. People are not going to come in and take a regional bet if they're seeing a lot of roadblocks at each country. So I think it's definitely an enabling environment. I think at the political level there seems to be very strong buy-in at the very top, and I think we are seeing a lot of people partnering to make this happen. So I do think it's going to be very attractive for foreign capital. The returns are extremely generous in this part of the world and in Africa as a whole, and it just needs some kind of process in order to get this flood of cash directed into the country, and I think that's what's happening. What
about investment being skewed and biased towards Uganda with the oil reserves and Tanzania with its mineral deposits? There is a sense that a lot of investors coming into the region tend to go there because they're expecting boom times for those two economies, and some of the smaller ones like Rwanda and Burundi are left out.
Well, I think first of all, Uganda, clearly this is this game changer. The oil in the ground is 2 billion barrels. It is 2,000% more than the annual GDP. So obviously this is going to attract a great deal of money. You've got Tullow, you've got Total, you've got Connaught, all piling in. So you've got people going after a specific opportunity there. You've got the same thing in Tanzania with gold and various other minerals. I think what is somewhere like Kenya, the data doesn't capture the amount of bottoms-up entrepreneurialism that's coming in. You might not get big flagship payments coming in, but you're getting a lot of remittances, you're getting a lot of cash, which when you capture it all in total, looks extremely large compared to Uganda and Tanzania. With regard to Rwanda, Rwanda is running a different route, isn't he? Kagame's got a clear vision. He's trying to sort of lift up the intellectual capital, the ICT side, and he's making his country the most open of all. I mean, any African, I think, can go and work in Rwanda without a work permit already. So, I mean, you know, he's really enabled the environment and has a very good vision. So I think everyone's got their competitive advantages. It depends what you're looking for, but in a region of 125 million, a GDP of 75 billion, and a low base effect, it's very attractive.
Now, President Museveni also stressed the need to boost competitiveness in the region. In fact, his words were, don't just receive trade and investment from China, compete directly with the Chinese. Now, in terms of changing a mindset and governments creating an environment that starts to focus on competitive advantages in areas such as manufacturing, what's being done about that? Because we need to move beyond just being providers of raw materials, agro goods from Kenya, for instance, oil in Uganda, Tanzanite and gold in Tanzania, to moving into other tiers of economic activity.
Absolutely, we got to go up the value chain. We got to go up it quickly. We haven't made significant strides up that value chain, so I quite agree with his point. Whether I think it makes sense now to go and compete with China, I'm not sure, because I think there's an enormous market on our doorstep which we haven't even captured yet, which is what this conference was about. And I think I prefer the idea that the World Bank has been floating, which is looking to outsource Chinese manufacturing into manufacturing hubs, and I see no reason why we can't do that in East Africa, and for that to be the locomotive for bringing our manufacturing up to speed. But overall, clearly, our architecture is very basic, as you're saying. We need to do value addition. We need to unlock this unlock this region, because it just starts. It's like a heart, isn't it? You need the blood to pump around, and I think that's what this conference is all about when it comes to transport and energy.